Hey guys, my name is Akil Stokes. I'm a professional trader and trading coach over at tier1trading.com, and welcome back to the Trading Edge video. If you guys are brand new to the channel, this is a video I've been doing here each and every weekend on YouTube since the dawn of time. It seems like sharing with you some of the best trading opportunities that are on my radar for the week to come. Today, we're going to look at about 8 or so. I'll put a little thing in front of you right now so you can see what we're looking at and approximately when it will come in the video. If you want to skip forward, while you're doing so, do me a favor, hit that like button, subscribe if you're brand new to the channel. Lots and lots and lots of valuable content on this YouTube channel, updated on a weekly basis, and it's 100% free. All right, let's hop into things. We're going to start with the euro dollar, and real quick, I'll be bouncing around between two different platforms here. I get that question a lot. The platform in front of you right now is going to be NinjaTrader. You'll also see me go over to something like this. This is going to be TradingView. I use both of them in my analysis. NinjaTrader is what I've been using for the longest time for my actual execution, because I've been doing it before TradingView came out. But these are my number 1 and 1A favorite trading platforms or charting platforms. Doesn't mean it has to be it for you, but I always get the question of what are you using? What platforms do you like? These are a few of them. So we're going to roll through short and sweet on each pair today since there's a lot. If you do have any questions, just type them in the comment section below, or you can hit me up on social media. I love to talk trading, so don't feel nervous about DMing me or anything like that. I should say this, if I ever DM you, it is not me. It is a bot. They're probably trying to scam money. So if I reach out to you first asking about managing money or anything like that, run away as quickly as possible and share with me a screenshot on the way so I can warn the others out there. But we're going to start on euro dollar here, and euro dollar is in an interesting position. We came to a nice little level of structure. You can see these red and green boxes on your chart. These are my VS1 levels. These are basically, it's an indicator that we use here at Tier 1 where it's a visual representation of key levels of support and resistance. And you can see we're sandwiched between a few. We came down to a lower one. We also had some nice confluence with an AB equals CD pattern. So we'll call this an equal measured move. Essentially, you're looking at this, right? This first move down is going to be the A and the B. I'll go ahead and write that in for you to make it clear. A, B right here. This little move up, this retracement is going to be the C. So this is where our B and our C connect. And then what we're looking for in this AB equals CD pattern or equal measure move is an approximate move of that C to D leg being the same length as the A and B. You can actually just draw this on, copy and paste it, and connect it to make that prediction. This one has a little bit of time symmetry as well. But it's a nice little confluence of picking out areas where we may see a reversal. You also see a nice psychological number down here as well. 105.00. The human brain likes 0 zeros. It likes tens. It likes 5 zeros. It likes quarters, halves, all of that fun stuff. So whenever you come across those levels in the market, those can act as, I wouldn't put them on the same level of structure, but they could be similar because, again, the market moves, or the market is only a representation of the actions of the participants who are involved, right? And that is human beings. So if you can understand human psychology, crowd psychology, it gives you a little bit of an extra edge on understanding why the market does what it does and why it likes to move the way it moves. So you can see we're at a VS1 level, again, a level of structure. We can look left just to kind of give you a bird's eye view of that. You can also see we're sandwiched in between another one. So this is going to be a short-term counter trend trade. And what I'm looking for here is simply a move from this lower level of structure initially to this level of structure, and a higher level would be this level right here. Now we've already started that reversal a little bit, or that hold essentially here on the lower time frame as I go down to the 4 hour. Obviously, you could, if it's within your rules, you can buy right now, but something to look out for is a retest of this level of structure, making sure that we hold on the secondary test, and then look for a move back up to that level, right? This would be something called a double bottom. It's basically when the market tests the level, retraces slightly, retest the level, gives a secondary hold, so a little bit more confirmation that that level is likely to hold, and then we see a reversal in the opposite direction. So that's what I'm going to be looking for here on the euro dollar. So next up, we're going to head over to the pound dollar. And the pound has been a very interesting pair lately. If you've been watching the market since really, last Friday, this has been one of the most volatile currencies in the market. Overall, the dollar has been pretty volatile as well, as we're seeing kind of a risk-adverse nature in the world. Yen came out and basically said, hey, we're not doing anything with interest rates, so even more money is flocking towards the US dollar. But the pound in particular has been very volatile. And you can see we've seen basically a straight dump off from $1.30 down to $1.24. Now, at some point, we would expect some relief. Again, it's a natural way of how the market moves. It's natural supply and demand. The people that are selling, at some point, you're going to reach a point where the price is cheap enough where there's less sellers that are interested and previous sellers are looking to take some profit, given the opportunity for buyers to get involved. Now, what's important to understand is that, again, we look at these as called counter-trend trades. We're looking for these periods of relief. We're looking for short little retracements. We're not looking for full-blown reversal, because eventually price will get to a point where the sellers are interested again, and we'll see some continued movement to the downside. So going back to a technical perspective on here on pound dollar, we're not really at a significant level of structure. We're starting to form one. You can see the VS1 level forming live right here. If I just draw a horizontal line out, which is a wonderful tool, a lot of it, I guess it's not a tool, it's a drawing device, but don't underestimate the power of the horizontal line. It is a great way to visualize and see where you're at in the market, especially in comparison to past structure. This is why I like the crosshairs on my screen, because as I actually go and look at price, I look at those crosshairs, it shows me exactly where we're at. So we're not at a particularly important level of structure, so that makes me want to be a little bit more cautious here. But we are showing signs of a potential reversal once again as we go down, as we look on this time frame, especially with the RSI being overbought and coming back over that 20 line, but also as we go down to the lower time frame. And again, real quick, I just want to keep this VS1 level in mind. I do have mines set to adjust per time frame. That's why you'll see them kind of bounce around. But I do want to keep that level of structure right around $1.27 in mind, because that could be important for targets. Now, as we go down to the 4-hour time frame, you can see a nice little reversal pattern forming. It's not going to be as prevalent here, but if we go one more time frame down to the hourly, you're going to see a head and shoulders type of pattern here, where the market comes down, we consolidate, we spike down, we form some structure, we come back up, and we form a nice little shelf right here, which we have actually just broken. You can see that we violated it. Now we're retracing back down. So this is going to be a nice little level, this bigger zone, and we can get specific during the week when we do our live streams and our live rooms about where in this zone to attack. But this is a decent opportunity to look for a pullback into this zone and an opportunity to trade it back up to that higher level of structure that we looked at on the higher time frame. So another nice buying opportunity here on the pound dollar. Next up is dollar yen. We talked about this during the week. If you guys have been watching the live streams, you'll remember this from, I think, Wednesday's session. It's one of the sessions that I titled "I Love Trading the Yen" or something like that. But we had a higher high, higher close. We know we have room on the higher time frame to go higher, right? We looked at that earlier. Again, stay in the mix if you guys are not subscribed to the channel, and keep up, because a lot of these opportunities are going to be review type opportunities. I don't have enough data in my chart, but you'll have to take my word for it. Let me hop over to Trading View so I don't load it up, and just hop to a weekly real quick. This is why it's important to stay in the mix with what's happening. That way it's not all new to you. It's kind of just a follow-up, and it's a lot easier when it's a follow-up. But you can see our next relevant level of structure is going to be up here. So we still have room to the upside here on the dollar yen. And again, what we're getting is a little bit of relief. Lots of yen weakness in the market. People are making money, people are making profit. We're going to see a little bit of relief, but I don't see any reason not to expect a continuation, right? We're going to have a weak yen. Bank of Japan has come out and said we don't mind keeping a weak yen. We're going to have a strong dollar. So it only makes sense from a fundamental and a technical standpoint, which is more important, to look for buying opportunities. So you can see we're currently retracing back into our upper VS1 level right here. This entire zone is going to be our kill zone. So once again, we'll pinpoint the area within here where we want to attack. But we're looking for continuation opportunities up to that level I pointed out on the weekend. So another pullback trade, this time on the dollar yen. So next up is going to be the pound New Zealand. This is going to be similar to the pound dollar trade. You can see we're currently trading at a previous level of structure. Price action has rallied up to this level and we have held. This is going to be a decision point where two opportunities exist. One would be a counter trend trading opportunity, a bearish opportunity if we were to hold this level. So this is a prime level for a 3-bar reversal. We have a high momentum candle up. We have a doji, which is indecision. If we were to get a lower low, lower close, that would be a quality sign for potential sellers to be here. If we were to violate that level, and if we sell, we can look for a retest of our inside level of structure right here, right above 193s. If we violate this level, meaning we get a break above, close above, break above, and close above, then we could look for a continuation to the next level of structure, which once again is going to be right in this level right here, this being the low, so the conservative level right above 196, excuse me, and then our higher level being above 198. So decent opportunity here on pound New Zealand both ways. This is what I mean when I say we want to be predictive in our analysis, reactive in our execution. As traders, right, I look at us as kind of being like mercenaries, and apologize for using that in this time of war and whatnot. But what I mean by that is that we don't really have a side. I don't really care if we're bullish or bearish. It's different from being an investor. I just want to be in the right direction of price, right? I did a video a few weeks ago about the power of prediction and talked about how the prediction is much more important than the entry. And this is a good example, right? So when we're doing our analysis, we're using this if-then syntax. We're saying, if this happens, then I look to get short. But if this happens, then I look to get long. And if you ask me the question right now, Akil, are you short or are you long? The answer is I don't know. But the market will tell me. And once the market gives me that final clue, boom, then I can lock in on that particular direction. So this is a perfect example of that. I call these decision points because based off the decision that the price action makes at this level, that's going to tell me what to do. Very similar is going to be Euro New Zealand, so we don't need to spend a lot of time on this, but basically an identical situation of pound New Zealand, right? Price action is at that level. We haven't probed in the same ways we did on pound New Zealand, but same thing. If we hold, we can look for a brief retracement. If we violate, we could look to a move up to the next VS1 level, right? This green box representing the inside level of structure. One thing we may want to do on Euro New Zealand, just to see if we can clear things up a little bit, is let's see if there's any high volume spikes within that zone, right? Because we have our inside level of structure right here, which is important, but let's just see if there's any confirmation of perhaps a stronger level we can look for. So I'm going to take my volume profile, which basically shows me the different volume levels in the market, and not necessarily bar by bar, but by price point. And you can see the ones where we spike out, higher levels of volume, the ones where we're kind of in, lower levels of volume. You can see we actually don't really have a decent spike at this level. We don't get high until we get right around here, right? So if you're someone that's a little bit more aggressive with targets, maybe, and I'm drawing in a fib as well, maybe, 618 Fibonacci, maybe you take that into consideration as well. I tend to be more conservative with my trading. This tool was something that I'm experimenting with for the entire year, right? I've been on about a 2-year study of volume, really more than that, but a 2-year serious deep dive into volume. And this is something that I'm highly considering to use in my analysis, but it's not there yet, so I can't technically use it in my trading. So I would still default to the inside level of structure that lines up with the 50% Fibonacci. But this is one that I'll take notes on, because if I'm able to get a little bit more out of each target and this tool helps me do so, well, you know my philosophy, right? Win rate doesn't necessarily change that much in your trading once you're kind of locked in your strategy. So the things that you want to adjust are going to be, how can I make a little bit more on every win, right? Increase my average win. And can you guess the other one? 5, 4, 3, 2, 1, right? How can I decrease my average loss, right? If you think about that, here's what it looks like. Let me just get a box tool real quick. If I can find it, I can never find it. It was right here the whole time, right? So if this is my average win and this is my average loss, again, a few ways you can look to increase your win, or you can look to increase your overall profitability. One, you can increase your win percentage, so you have more of these and less of these. Two, you can increase this by a little bit. You can decrease this and or decrease this by a little bit. And over time, right, we're talking over hundreds and hundreds of trades, right? Years, right? Not trade by trade, but over time, this makes a massive difference. Trust me, I've been there. All right, so next we're going to take a look at Euro Canada. This is a continuation opportunity. You see, we just broken a lot of previous levels of structure support. One right here, a recent one that formed right here. Looking left, we have lots of room to the downside. So this is going to be a continuation trade, a pullback trade, right? You can see price action. If I actually get to the right part of my chart, price action has broken and closed below. I'm going to go down to the 240 chart to make it a little clearer for you. We are pulling back, so putting in a retracement. This is a nice chance to look for a short and a continuation to the downside. Keep an eye on Canada as well. They've got some more important monetary policy stuff coming out in the near future too. So looking for shorts on Euro Canada, a continuation to the bearish side. All right, we're gonna do one more here. We're gonna hop over to the DAX and take a look at two potential patterns, right? One, we have a potential cipher pattern. So this is a harmonic pattern, a ratio pattern, an advanced pattern. You'll hear us call it by different names. This is the one that we actually invented, so it holds a special place in my heart, even though I hated it when it first came out and tried everything in my power to prove it wrong. But this would be a cipher pattern. We're looking at an X to A, an A to B, a B to C, and a C to D. And basically these moves are basically a series of Fibonacci retracements and or extensions that come to specific levels, and when you put them together, they have some really good high probability pattern formations, right? So ultimately, this would be a short right here. This would be a bearish cipher pattern where you'd be looking to sell once we get into this zone. Oh, horrible circle right here. But we also have a head and shoulders forming, right? We have a left shoulder, we have a head, we have a right shoulder. So if we violate this neckline, which would be right here, you can actually look for longs in anticipation. Well, I shouldn't say anticipation in the cipher, but you can look for longs, and maybe that cipher completion is your stop and reversal point, or maybe that's the point where you look for potential targets for that long. So hope you enjoyed the opportunities, guys. Do me a favor before you head out, like this video, subscribe if you're new. If you have any questions about anything we looked at or anything trading related in general, leave it in the comment section below. You guys know I have a trading coach podcast, lots of cool episodes each and every week. And many of the episodes or the ideas for those episodes come from the questions that you shoot me here on YouTube or the questions that you shoot me over on social media. So feel free to do that. Feel free to follow everywhere I'm at on social. Feel free to hop into the Tier 1 Trading live room, either via the live stream that we do here on YouTube every Tuesday, Wednesday, and Thursday at 7:30 a.m. New York, or as part of your 14-day risk-free trial membership on the platform. Trust me, the platform's a little bit of a better option because you get a lot more, but either way works. Anyway, enjoy your weekend. Until next time, plan your trade, trade your plan. Take care.